Uh-oh. Uh-oh. If it's Sunday, it's Meet the Press.
Welcome back. CNBC getting the very first interview of the day with Alibaba Executive Chairman Jack Ma. Carl Quintanilla asking him some questions about what reservations investors may have about the company.
What would you say to an American investor who is really interested in your company and the growth opportunity, but worries about interference from the government, transparency, books, regulators we don't understand? How do we get around all of that?
Trust. Trust us, trust the market, and trust the young people, and trust the new technology. And the world is getting more transparent.
Well, reaction now from our panel, along with CNBC's Jeff Cox, Sierra Maya 360 founding partner Amish Shah, and SageWorks chairman Brian Hamilton. And first, we want to ask our viewers at home, in 1 year, will Alibaba be higher or lower than it's trading right now? We want your thoughts. You can go over to cnbc.com/vote and weigh in right now during this segment. So on that note, Jeff Cox, you've said you have some pretty specific concerns here. What are they?
Well, Kelly, my concerns go over the longer term. You know, we just had that clip from Jack Ma, and of course he's going to say trust, trust, trust. I mean, we've heard that song and dance before from China about trust us, and it's never really worked out very well for U.S. investors. So that's just one concern that I have about will it play in the U.S. The other one, we've heard a lot of talk about the whole governance issues. I think that's very important. The opaqueness of the IPO, and finally, it's just the hype. And we saw today, look, the retail investors didn't get very much of this, and the retail investors who did get in probably lost money today. So I think that, yeah, everybody's going to be dancing around the end zone and spiking the ball. Maybe it's a bad analogy for football right now, but I think the story here is yet to play out. According to my sources, we have a 9-month lockup at $58 on this. If I was a long-term investor, I'd probably wait 9 months and a couple of days before I really made any judgment about where Alibaba is going.
Amish, did you guys get in on this?
You know what? We did on the secondary market, not today, though, but I got to disagree with what Jeff said. If we look at history, right, not only did Jack pull off the biggest IPO in history, but this is the kind of entrepreneur we want to invest in, right? In 15 years, a rags to riches story. I'm really excited about what he's going to do with all the cash. He's going to go on a buying spree. It's also going to make other companies in the market react. So you're going to have eBay, Amazon, Google, Facebook, everybody trying to buy companies. But I'm really excited about is the other economies it's going to open up. What's going to happen with India next, Brazil, some of the other countries that are going to follow what Alibaba is doing,
but Brian,
and also have rags to riches stories.
But
Understood.
Amish, you can't look at it that way. You've got to look at the specific offering. I was all ready to argue with Jeff, okay? If you guys remember a week ago, I was very high on this company. Here's what bothers me. Last week, they were thinking about going out 60 to 68. Now we're up near 90. They're 26 times trailing revenue. They're 60 times trailing profit. I love the 44% net margin. Love it. I like the company. We're going to trust in this company, but we do have to know that they have a different structure than American companies. So I'm a little bit worried about where their price is right now. Why that huge jump literally in one day? So I agree with Jeff.
But Brian,
yeah, I think there's a bigger issue. I think there's a bigger issue than even just that, and it's Jack Ma himself. At a certain point, if he hasn't already, Jack Ma is going to get bigger than the Chinese government is comfortable with.
Jeff, how do you know that?
He is now,
and what about the other 27 investors who are involved?
Ever to come out of China. He is seen as this populist guy who's helping to lift people out of poverty. That's what the Chinese government is supposed to do. So he says to trust me. That also means to trust that this is John.
Yes.
That he can continue to push this particular brand of capitalism that he kind of gave birth to in an extra way here at the New York Stock Exchange.
That sounds like a great advertisement, but we're investing in a company, not just some guy who's a great entrepreneur.
No, you're not.
If you
That's
look,
the issue.
wait a second. Let me finish. No. Let me
My
finish.
problem is I don't think you know
really
what
got to
you're
look at the
investing
actual
in.
performance of this company.
Kelly,
you really have to look at the company, though.
One at a time.
With Facebook, with Facebook in 2012, there was so much hearsay. We all know what happened. That less than a year, it doubled. Twitter in 2013 did the same thing. Not only will this
Amish,
company
we're in a
double,
bull market.
but
Hold on,
watch
wait a
what
second.
happens.
I want to get my word in here. I got to get my
Sure,
word in
go
here.
ahead.
We're in a bull market
Let's hear
right
it.
now. We're in a bull market. All the babies look cute in a bull market. You've actually got to look at the fundamentals of the company. I love the company. I think it's great, a 44% margin. But Jeff is actually right. If you look at the regulatory environment of this company, it's got to make consumers beware just a little bit. I'm a little concerned simply about where that price is sitting right
and
today.
loving a stock are two different things.
Jeff Cox, go ahead, Jeff Cox.
What is Warren Buffett's first rule of investing? Don't invest in something that you don't understand. And I don't think that as a marketplace that we understand this. I mean, everybody knew $68 was the wrong price for this stock, that it was going up. But as far as valuation goes, I mean, I think Amish makes a really good point. It's just the valuation numbers are really questionable here. And, you know, what's the transparency of this company? That, you know, I just think, again, from the long-term story.
Look at the growth in revenues. The revenues have been growing month to month for the last 2 years. Look at what they're doing. There's still growth in China. China's GDP grows 5 to 6% the next 5 years. I honestly think you guys are wrong. This is an eBay. If you could buy eBay, PayPal, also Square, maybe throw in a couple other companies like Amazon, that's what Alibaba is. And
we got to go, but Nicholas, what
bigger.
side do you come down on here?
Well, I just think if you're looking for exposure to the Chinese internet, the Chinese consumer, and the Chinese economy, this is the one you want. This is how you get into it. And I also think if you want to look at the real challenges facing Alibaba, they have more to do with actual business challenges, like perhaps
Kelly?
their mobile exposure.
Yeah. Kelly,
just so
why are
everybody knows
institutional guys buying at 60 and then a day later we're at 90? I'm not saying the company is a bad investment. I'm saying at the price threshold right today, they are priced relatively much higher than Facebook. They're not as high as Twitter.
And price
than
matters,
Google.
or at least it should matter in an efficient market.
And if more people who got it at 68 wanted to sell, it wouldn't be at 93. So you do actually have the long-term story they're holding.
Right. About 54% think that Alibaba shares will be higher in 1 year than they are now. Not an overwhelming majority, but one nonetheless. Thanks, everybody, for your view this afternoon. That's CNBC's Jeff Cox, Sierra Mia's Amish Shah, and SageWorks' Brian Hamilton fired up as we head into the weekend. No Facebook flop for Alibaba's IPO, with trading going pretty much like clockwork today. But what are investors really